This is a very special chat we are having with Mr. Gautam Singhania of Raymond on the channel right now. Remember, the company has recently announced a value unlocking drive, and that's what this interaction is about, Raymond's value unlocking drive. Mr. Singhania, thank you very much for sparing time.
Thank you for
chatting with us. You know, the street is quite excited about the recent announcements, and almost a 40% surge in your stock price in a month ever since you've announced the demerger of lifestyle business, debt reduction, etc. Talk to us about what triggered this. What is the top management's idea about going about this particular announcement?
So, I think I have stated repeatedly in my several interviews in the past that we want to create shareholder value, and this is in line with that. Now, to come to where we have come today, there has been a series of things that had to happen, and one of them had to be a trigger. So two things really had to happen: a trigger of a land demonetization, in this case, of getting some funds in so we could reduce debt, and number two, if we had to do the demerger, we needed the old co. I'm going to call it old co, new co, so it's easier to understand. The old co would need a business to sustain itself, and over the last 12 months, you've seen the real estate commit to itself. So you'll have two separate businesses with two separate revenue streams. Combined with the debt reduction has really made the demerger possible. It's something honestly we have been thinking about for 5 or 6 years. And even the land monetization process has taken its time.
Sure.
But sometimes things take their own time,
yes,
no matter what. And you know, what we couldn't do in a very good market, we actually did in a very bad market. So that's the irony in the whole thing.
That's correct. I mean, land monetization itself, several years people were looking forward to it, then finally it happened. And then now you've given a dollop of value addition by this demerger. Let's talk about the lifestyle business first. The latest data shows it did a EBITDA of about 600 crore. How's the growth profile of this business? How's the margin profile looking? And in the environment, what's road ahead for this business?
So let's philosophically look at what we're trying to do. The lifestyle business has had quarter-on-quarter growth. Okay, this last quarter has been challenging, which has been challenging for everybody. But philosophically, what are we doing? We're spinning the lifestyle business off into a separate company that will have a whole your textile, apparel, everything. We're putting the right governance into place, the right focus. We're giving you the right ROC in that business. The ROC in that business is already 18%. It will go out over 20, 21% is the direction it's headed in. At the current multiples, it should have $1 billion market cap. So two boxes get ticked really from an investor point of view. An ROC of higher than 15% and $1 billion circa valuation, which in my opinion will then bring in a completely different set of investors in that business. Number two, investors like single focus businesses. Couple that with a good governance structure that we put into place. You must have seen in the Raymond Group over the last couple of years, we've really focused on governance, increasing shareholder value. So I think all of this is more important than the 600 crore number that you talk about. It's really, this will drive the business to another level. So and that's what we want to achieve. And just to, if you then step back one, it all comes from the single philosophy here, which is to create shareholder value. A lot of people said that it happened so quickly with secrecy, but that's the way we are. Once we decide something, we do it very swiftly.
Yeah, that's correct. I mean, earlier this high quality business was getting subdued valuation because the overall business was housed in one company.
You're getting conglomerate discount.
Yeah, now $1 billion roughly the fair value, whereas your main company valuation was a little under $1 billion. That's where the unlocking is happening.
That's where the unlocking is happening.
Yeah.
Because the multiple will change.
Yeah.
The minute it's a focused business, you won't get the conglomerate discount and the multiple will change.
So what is the arrangement for royalty between the old co and the new lifestyle business which has been diverged?
So, you know, it's unfortunate that when you do so many things, people focus on the one thing that might not suit people. I'm being very candid.
No, absolutely. But the reason I was asking is because the market wants to know.
So that is a subject under discussion. We've taken on board the feedback that we have got on it. There are reasons we have done it the way we have done it. Because also in the short term, till the real estate creates a proper revenue stream in the old co, I will need a revenue stream in the old co to support the debt there.
Sure.
Now, We could have waited another 2 years to do this. But I'd rather say, we are there, let's get going. You might not get 110% value, but you'll certainly get a great amount of value. So the matter is under discussion internally. We have taken on board all the investor feedback that we have got, and we'll deal with it.
Sure, but the reason I was asking was that the market has got this issue on their mind that what percentage of overall profitability you will retain in lifestyle, and will it be a reasonable kind of arrangement?
All the lifestyle profitability will go to lifestyle.
No, in the sense that royalty payment, the lifestyle business will do to the old company.
So there are many companies where royalty payment is done for the brand, and it is capped. It's not that it's unlimited. It is already capped, which has been communicated to the market. Having said that, we have heard the feedback from the market, and I want to assure you that we will discuss it internally and take the best call in the interest of shareholders. Please understand, I am the largest shareholder.
Yeah,
so I would be interested in the best, whatever it is. Number two, you are a minor shareholder in both companies. So if the benefit is in company X or Y, you are still getting the benefit.
So you are also in discussion with...
So I want to also clarify something, that the brand is not held personally. It is held by the company. So whether you are holder in old co or new co, you're still having the benefit in either one of your two arms.
Yeah. The feedback which we got from the market, a lot of your older shareholders are wanting to add, and that's why the run up is because they believe that the liking of business towards new lifestyle business demerge will be higher. Are you also getting good feedback about this end of the business? Investors from institutional side are
I
keen
certainly believe that there will be a new class of investors that will come into a focused business, having met two important criteria, one on ROCE and one on minimum market size of the company. Having said that, there will be a different set of investors that would get attracted to the real estate business, because the real estate business will still be a significantly large business in the old co.
Okay. Are you in discussion with institutional shareholders who may want to know more about? Are you doing roadshows and reaching out to?
We are reaching out to shareholders has been a continuous process, and it will only intensify now once the demerger has gone through. Post the demerger announcement, I have met several shareholders personally. My team has done, I think, a couple of conference calls, and I will continue to meet investors and explain what the story is. And as a company, I want to assure my shareholders that we are here to listen. When you do things at a pace which is very fast, which you have also said we've done it very quickly, maybe some things get missed out.
Sure.
But we are open to dealing with the issues.
No, that's a great practice, actually, feedback from both the sides. Talk to us about how your FMCG end of the business is looking right now. I understand after consolidation there are a lot of synergies coming in, and you have plans there as well.
So the FMCG business for us is growing pretty well. It's it would be in circa 20-25% growth in that business. The consolidation has played out well for us because there's significant cost savings. As a DO company, we are the largest selling DO in the country between our two brands. And really, it comes back to shareholder value creation. So if you see the FMCG, apart from what we have done on the business side, we have done a lot on the governance side. I have stepped off as chairman of that company. I'm just a board member. We have 5 independent directors and independent chairman. And I think that's the future, the way the businesses should go.
How's the potential of this segment of the business? There are talk of analyst community see it, say 1,000 crore in the next couple of years, perhaps a listing later date.
I think our gross sales on the FMCG this year itself is 800 crores.
So it can easily cross 1,000, 1,100 crores.
Certainly. I mean, see, we are dreaming big in this now. We have put the building blocks in place, and now we're going to build on that.
There is also indication that perhaps a listing of this business also come by in the next 2 to 3 years.
The listing is the only way to create shareholder value. And the stated policy of the group is to create shareholder value. Listing will be inevitable. When it will happen, who knows? But the idea is to create value out of this business.
Let's talk about the realty end of the business. When you actually launched real estate plans, there was already a lot of inventory in that region, in the Thane region. Other players were also present. But perhaps because of the location and the brand, how's the experience been for bookings, etc. so far?
Extremely good. With God's grace, we've done well in the real estate space. 7-8 days ago, we launched the 1 BHK apartments, which have done well. I think more importantly, around our land, the ecosystem that will be built is something what people are looking forward to. Raymond has a brand. Raymond is conscious of that, and we're giving the right product at the right price, right location, right facilities, right brand. I think it's a good mix, and the proof of the pudding is in the eating. So eventually, if you look at the traction on sales and the sales that are booked in the balance sheet and money in the bank, that's your answer.
Yeah, great. Even in the lifestyle business, I'm observing, all around that you guys are really identifying newer areas. Like ethnic was up till now in India, last couple of years, a very large area, but bulk of it was unorganized. You're putting some specific focus there. What's the potential of these new brand extensions which you are doing in the lifestyle business?
So like you see, Raymond, if you say 20 years ago, was only a fabric company. Now you have fabric, apparel, ethnic wear, khadi, lifestyle, leather, accessories, made to measure, bespoke. So it's transformed significantly. Not only is it formal wear, it's casual wear as well. 5 years ago, you wouldn't get jeans in Raymond. But Raymond is an encompassing brand, and we're really leveraging on what the complete man wants. Now, if you take a wedding, typically in our Indian culture, Sangeet would be one night where ethnic wear would be one. Every male in India likes to get married in a Raymond suit, which is a great position to be in. But every Sangeet we were missing. I've just increased my business by getting into that space with ethnic wear, ceremonial wear. Khadi is the fabric of the nation. It's by the people of India, for the people of India. It's an emotional quotient. We put 50 designers in this space, and we have changed the face of Khadi. Now, emotionally, I'm very connected to it, because I think the poorest people in the poorest clusters in India, we are providing employment for them. And I can give you many such stories. Like there were kids in Dharavi who were making fabric for us. And they got one more and one more and one more and one more. And then there were about 14, 15 of them. And they left Dharavi and went back to their village. And they're making this product for us in the village. Now they've got together and bought a scooter. And they say, with the same amount of money, we'd rather live in the village because it's a better quality of life.
How are the Raymond stores doing? And also I want to understand, what's the feedback are you getting? Because there's a lot of talk about slowdown is hitting business. Consumption has also been hit, the data shows. How's your experience been at Raymond stores?
So yes, there is a slowdown. What's the answer? I don't know. But I think, like we talked before the interview, maybe a couple of quarters, 4 quarters. You've got to cut your costs. You become more relevant to the market. That's where you have to focus on. Having said that, I think there is a slight pickup, but this is not sustained pickup. I think you're going to see fits and starts, but we are back in the right direction. Like you only said, it's bottomed out. Number 2, if you continue to make relevant products, new products, you can keep growing inorganically in a way. Leather can become big for us, shoes can become big for us, accessories, ethnic wear, made to measure. Stores, we still see India is a very big market. We are already present in over 500 cities. We are reinventing our stores. So on one hand, we are opening bigger stores. On one hand, we are opening the budget stores, which are 800 and 1,000 square feet. Across the spectrum, we're almost 1,500 stores now. So I think we're in a good space.
2 things regarding your store expansion. What kind of response are you seeing from urban areas where you're operating versus tier 2, tier 3 where you're operating?
So urban, we are more saturated. Tier 2, tier 3 less. But the bottom line is that obviously the stores do well because the franchisee puts his money in there, and he's not going to put it in there if it's not a viable business model.
Also, because the real estate prices across the country have a negative bias, does it also come in handy? Because that is also a big part of the overall cost.
When the markets are down, the real estate prices are down. When the markets are up, you're never going to get the markets rocking and the real estate prices down. That's a dream scenario.
Let's talk about your garmenting end of the business, which is more B2B in nature. I'm told that you have tied up with even bigger global brands and talks are on for furthermore. What's the outlook on this end of the business?
I think India can become a sourcing hub for global brands. We have customers, large customers from the US to Europe to Japan, and the business continues to grow. We were forward thinking when we set up Ethiopia last year, and I think Ethiopia is now turning around. It had some political issues, but it is stabilizing. We're monitoring it on a week-to-week basis, and I think last 14 or 15 weeks it's been okay. So they have a referendum now and they want to stabilize it. So I think Ethiopia's worst is behind it. There were issues, I'm being candid, but it's fine now. Can you become clothiers to the world on the B2B side? Of course, bulk of our business is the B2C side, which is in India, so which is continuing to grow.
How's the competitive landscape looking right now?
So we welcome downturns like this, because if you think it hurts us, it hurts our competition even more. So two things happen. It hurts the competition severely. Number two, it makes us tougher. It makes us always introspect and look at the business. So yeah, I think competition in the fabric space, we're clear number one. And in the apparel space, you can see the shakeout of the men and the boys.
The main tagline of the company has been, up till now, Raymond the complete man. But is there a thinking at the board level, at the top management level, that we also need to reach out to the women? Because the share in the workforce is increasing, the overall, there is a much more requirement, or consumers also, women consumers also are demanding much more high quality products and preferences.
You must understand something. While they are clothing, they're two different businesses. Women's is a very complicated business. And whilst it's logical to think that an extension from men's wear to women's wear is just across the line, it's as far as a new business than it can be. Having said that, we are doing a little bit in the women's wear under Park Avenue Women. It's got good traction, and we're going to build on that. I think the more important thing, which is not reported and which people don't know, and our research has shown this, that the male consumer is extremely protective about the brand, and he does not want it to go into women.
So you'll end up diluting the brand if you go too far in that.
Yeah, because there's a lot of, they're very protective. Ki ye hamara brand hai. And leave it first, don't infiltrate in here. So it's got a very strong male association. Therefore, we're doing Park Avenue Women, not Raymond Women.
Sure, great. So lastly, give us a big picture roadmap for next 2-3 years for the various segments of the business. What is the kind of targets which management has set for itself?
Every business has a different target and a different roadmap. Number two, I think the environment is changing very dramatically, very quickly, and very unpredictable. I think anything that can't be written in 5 words is not worth pursuing. And literally, there's only one mantra that works here now, is increasing shareholder value. And everything that we will do in every business will be to increase shareholder value. Even if you have to downsize a business, even if you have to sell land, or whatever it may be, but so long as it meets the matrix of increasing shareholder value, that is what we'll do.
So that will be the key focus of the management. And you, in fact, last 2-3 years, you've started talking in that.
And we're delivering on it.
We are delivering, yeah, I see.
I mean, if you see, everything we've done is delivering on that. And I think that it sounds so simplistic, but when you take it down the system, it works.
Sure. All right, Mr. Singhania, thank you so much for chatting with us today on this key announcements made recently, and of course, allaying a lot of shareholder concerns as well. Thank you very much.
Thank you very much. Thank you.